What's good, guys? It's your boy CS back with another one. Finally back from vacation. I am charged up. I am ready to go. I've just done some analysis this morning on my PC, so thought I might as well just record some content on my mobile as it's just easier when I'm on the go, as you guys know. And yeah, everything came to fruition. So let's just talk about the previous video that I made, right? From like 2 weeks ago. I basically said, look, let everything just work out how it's supposed to work out. So where are we now? 31st. I think I made that video around here. It was around here, right? Thursday or Friday, I think I recorded it, or Saturday maybe, and everything came to fruition, right? We just basically pumped from 102 all the way up to 111, and you know there wasn't much more to it. All the analysis that I had done from here suggesting that RSI was still with the strength of the bulls, etc., etc. Everything came to fruition. And that was all the analysis that you guys needed to get that pump. The past couple of days or week or so, it had been going sideways and then finally has just, taken a bit of a dump the past couple of days. So we're going to take a look at the charts properly. Again, this is my first time looking at the charts properly on my PC like I did this morning. And I'm just going to translate everything to you in real time on what we're looking at. So, okay, with Bitcoin, POC zone, I'm just going to start with, is it's fallen out of this POC zone and it rejected yesterday and it looks like it's trying to back test. So today, ideally, we do want to fall back into the lower trend line of the POC. Whether that happens or not is a different, a different question. And also just making this more simple, right? If we just go into this POC zone chart, which is more of like a weekly one that I've just been focusing on. We never had a close above 104.5k, and it was only been the past 2 weeks that, well, not only did we close above that POC zone, we also got closes way above that. So this week, if we close below it, would be quite the big damage in my opinion. And a lot of people are already talking about, tops from the previous cycle, how it's basically this double top that has formed, and they're basically trying to equate it to this. And in fairness, I don't disregard that analysis that, it could technically be a top. I did actually say on one of the signals that I gave, I was like, if you were going to short, this is the perfect time to short. Like, I literally gave that live signal whilst I was on vacation. So that made sense to short when you're in this kind of wedge pattern, right? Because you're conforming to the actual trend line. So this was the actual, rising wedge that it's been in. And look, it's basically conformed, hit the trend line and just rejected down. And could it come all the way down here is the next question, down to 99. And we'll be looking at that very shortly. So on the weekly, it is positive in the sense of the closes that we had the previous 2 weeks. However, this one candle close can be very negative for Bitcoin and alts. Now, there was also this other wedge pattern that we've kind of broken out of originally. You could say that the target again is around 100k, 99k, around that roughly. If I come onto my spider line chart, again, we could see that we could come back down to this yellow support trend line. And it's always been a heavy, either a rejector or acceptor, shall we say, of support and resistance. So this will be acting as key support around 99k next week if we were to go there. I'm not saying that we are going there, but I'm just saying if we were going to go there. One of the things that was quite surprising, obviously I'm looking at this now with a more eagle eye, but how fast we just tagged the 20 EMA on the daily and we didn't really get nothing from the bulls, like no response. That again, I think I took a long here, and I was telling people I'm taking longs here. We did get a bounce on the actual day, so I got stopped to entry on that particular day. Like, we did get a bounce around here, back up to like 100 and something. And the other longs that I took with, I think it was with Adam, here at the outer trend line, we did get the bounce back up. And again, I got stopped to entry again. And this is the the secret sauce of how I do things, which is I take minimal risk, especially when I'm buying like these falling knife types of patterns, that I'm not willing to go below my base entry. As long as I get a little pop, a little bounce, if it comes back and takes me out, so be it. So be it. It's not the end of the world. At least I don't lose anything. Now, I know a lot of people have been liquidated. I know a lot of people got harmed throughout this past couple of days. And again, there was two sides to the coin. I wasn't there in real time. I did mention that as in like short right here off this trend line. But on the contrary, I was still a bull as well. And again, I was surprised we didn't get a reaction off the 20 EMA. The 50 EMA is around this 99k region, right? So this is kind of something that potentially could call us. Again, no crystal ball, no promises. And so when we look at the USDT, the tether dominance chart, not only have we come back into this flag pattern and we've broken out of it, we've also currently back testing it, which I don't like, because now, in my opinion, this is either a head and shoulders pattern, right? So an inverse one. So, left, head, right, and then up. Or you can just say, if you want, double bottom, blah, 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 whatever you want to contend with, right? And if we look at the measurement here, and guys, you got to get into the practice of doing this yourselves. Hence why I do these one-to-one sessions, so you're not going to learn trading without going through the bumps and the ruts, etc., without learning from somebody who knows how to trade and has experience of being patient and disciplined. Anyway, my point is that 6.75% move at the neckline. I know this sounds very, very scary, but this could take us all the way back up to like 4.98%. That's the double bottom target in essence. So in actuality, I might even just put an alert, because that would be a good place to long. If that were to occur, and again, I'm giving you both sides here, because that's what we do as traders. If you are short, then be short for a reason. And if you are going to go long at, sensible areas. Now, usually with dead cat bounces, what happens is they come back up and then they just curl back down like that. So this could just be, a little cool off, hoping it's just a bit of a cool off and we have the continuation. That would make sense to me, because that's the continuation of the trend if we zoom out. Like if we look at the daily, if I take everything off, just so you can see, right? You come down, you zig, and you zag back up, right? And then you zig, and then you zag back up. You zig, zag, zig. And then you come back up here, and you really test the major resistance line here. If we were to go there, that is what I'm saying. If we were to go there. There is no guarantee at the end of the day. Trading is a game of probabilities. And on the combined chart with the tether dominance and the USDC, we are now back in this wedge. So they don't directly correlate. I don't know if you can see that. They don't directly correlate. The different patterns that they show. But I think this one is now playing more weight, the one with the USDC and the tether dominance. And to the VIP chat, the private members, I've given full instructions on how you can add this chart to your trading view. Now, a couple of things that I really wanted to look at here is, again, I've been out of the game for 2 weeks, so this is me just getting up to speed. So we're going through it in live time of what I've done in the morning. The liquidation heat map is still showing a lot of heat to the downside on the 24-hour. And if I were to extend this to maybe like the weekly, it looks like we've taken out quite a bit. There's a lot sitting at 111. And you got to remember, in order for us to move up, we need people to short, or we need people to provide liquidity. At the moment, it's hard to provide that much liquidity. Now, on the monthly, this is screaming a lot, and this is still screaming a lot, around 99K on the monthly. Again, I'm not saying we are going there, but if we narrow it down from the monthly to the 2 weekly, for instance, there's a lot that we can cement through. And equally, it goes both sides. It can go upwards too. Now, the one that I tend to look at the most is the liquidation map. This one for me is the bee's knees. It's the one that gives me the most amount of accuracy. So there's a lot of liquidity here, right? And it kind of like stops around 102.2k. So if we would go to 102.2k on my POC chart, it sits right in line in this POC zone, right? And the bottom is 101.3k. So if we were to go all the way down here to the last lower I know a lot of people don't understand it, but basically the ones with orange are the ones with like major 100x leverage, people with 100x leverages going on. And the market likes taking those guys out first. So whenever you see orange, that's where a lot of liquidity is, where these guys are playing. They're basically Russian roulette, gambling, casino type of mentality. The yellow ones are like the 50x leverages, so they're still high. And then you got like the 25x's and below in like turquoise. The 25x's and below, the market makers tend to not aggressively attack. It's mainly the 50x and the 100x's, hence like the ones that I do when I convert them to 50 and 100x. But I do that later on. Anyway, my point is that the liquidity ends at around 101.3k. And that just, it hits bang on at that point of control zone, 101,350. So it looks like it could be calling us there. I'm not saying it is 100% gospel truth, but just looking at that particular map and this particular map, same thing. There's a lot of liquidity that they can just brush through over the next day or two. Even on the 7-day now, there's a lot of liquidity going upwards for shorts. However, on the 30-day, shows a different story. See, on the 7-day, there's a lot of liquidity going up now. So if we were to come back and retest it, we'd smash through all of that. 30-day, though, has mad amounts of liquidity. Like, that is scary to see how much there is to go down. The only good thing is there's a big wall that's forming at around 99k. So a lot of longs would come back in. And it'd be hard for us to take the price down any lower than 99k at that particular juncture anyway. Now, a lot of other things we need to discuss here are global M2. So I think a lot of people have got confused as to, global M2. And I'm just going to touch on this point because the one that I have, my lag is at around, I think it's around 80 days or something. Yeah, it's 80 days. It's 70 to 90 days is a sweet spot. So as we follow the global M2, the yellow line, and again, it's not gospel truth. A lot of people like to follow the line as if it tells you all the answers. It doesn't. And if you're new to this indicator, which a lot of people are, and that everybody wants to throw M2 global liquidity because everyone's an expert now, but doesn't really have a fucking clue how it works, which is quite comical. This is how you're using it, right? So there's peaks and troughs, and as the chart goes on and on and on, there's inevitably a down period moment, and this is the down period moment. So when we go here, we can see like it goes up and then a bit of sideways action, comes back down as like a little big wick, then comes back up, and then it makes its impulse move up, right, whilst I was on vacation. Perfect. Lovely jubbly. Then goes sideways like that, and then has a bit of a dip down, comes back up, which must be that wick, and then from that wick, this red wick here, it then makes its, well, okay, maybe there's a bit more to go, but it makes its descent. I'm guessing this is the descent that we're going through right now. So On track, this would put us towards near the bottom, either this week or next week. Again, let's just see how the weekly candle closes. I'm recording this on a Saturday, so there's still a lot of time. Granted, within that, the CME actually closed at 105,060. So currently, Bitcoin is, at 103.8 or 9K. So it's not too far away from the CME gap itself. If anything, I'd rather just see it get nuked ASAP on Monday and Tuesday. Let the bloodbath, just let it run rampant, and then we can, continue with where we want to go if that is where the trend is going. So that's how you do the M2 global liquidity. So right now it's basically correlating bar for bar that this could be near the bottom of the retracement, which would make sense, right? Now, patterns I've not looked at and I've not shared in a while, which again, just because I've been on vacation, if I had seen this, I would have taken that short at the top around here, right? And yeah, it's just such an easy short to take with the wave patterns, man. Like, look at that, bang on, take that short. Triple divergence, 1, 2, 3. Wow. That would have been, and I did say that was a great place to short. So it's not as if, it's just I just didn't have the time while I was on vacation. I didn't want to trade whatsoever. But that was telling us that was the short of a very big lifetime. Like, that is a very good short to take on the daily. And it really transitions. So, like, if we go through the gears from the 4 hour, that's a beautiful setup. On the 6 hour down, the 8 hour, now the wave pattern's now flowing back up. 12 hour flowing. The daily still got more juice to come through. And this is the scary thing, right? This is the scary thing. The 3-day has only just started going down. The 4-day has now flashed a red signal, and there's the divergence now. So there was one here, and now there's one there. And if that 4-day comes down, holy fuck, we're going for a ride, lads. We are going for a big ride. The weekly is now outwardly curving. It could basically flash a red dot, and a red dot is not good, my friends. Let me just put it to you this way. The last big red dot we had, which was like around here, so it was at the peak of 104K, and then the next red dot, it basically stayed there. We went from 104K down to 75K. So, look, I'm a realist. I am very much a realist. And I have to say, with the wave patterns, looking at that daily, it's still got a bit more in the tank where it can come back down. If it came back down here, though, that would be fantastic. And it ended, because then the daily could then just push back up and we could have the next leg. And this is why it's so important to take profits, because that's how markets work. In and out, zigzag, zigzag. But these wave patterns right now on the 3-day and 4-day they're very scary. They are very scary, because if we flash like that, and if we get a weekly flash, man, that is not a good sign. That is really not a good sign. That they take 10 to 20K off the Bitcoin price just like that, very, very quickly. And again, I'm giving you the bearish sentiment because it's important to have this sentiment in mind when making trades. Again, if we were to come up on the weekly, that would be fantastic. It would blow way past 110K. But if we come back down, it's just to cool off before we have another leg. And that is definitely on the cards. One thing I was also going to mention was, I don't think, I'm just looking at the meme coins. A lot of them have got slapped quite bad. Again, like Whiff, Loki, Pengu, Brett again, Popcat's not too bad actually. Neither's Mog. Turbo's down quite a bit. Yeah, a lot of them got smashed quite bad, to be honest, which is quite surprising in a way, just because altcoins themselves have not really done anything, and I don't really want to focus on altcoins at this present moment because, and the key point here is to just make sure we know where Bitcoin is going. On the lower time frame, these wave patterns are showing massive divergence, so we could, we could get a move over the weekend back up to 105k, which would seem sensible in essence. I think the biggest thing I really want to see of Bitcoin, and again, we're just focusing on Bitcoin in this video and the tether dominance, is we need to close at least at a minimum above 104.4. That's a really key level we need to close above. A very, very key level. So, yeah, let's keep an eye on that. In terms of SPX, SPX still has the gaps going on, like down here. So there's the gap, the first gap, and not all gaps get filled to the lower side, and it's still got this gap above that it still needs to fill, like the high gap at its all-time high. So in essence, when we zoom out, and I did say this as well in the VIP chat, was it in the VIP chat or the signals group? I can't remember, one of the two, but I basically said, look, at the end of the day, you've been blessed to have 1, 2, 3, 4, 5, 6, 7 weekly green candles for Bitcoin. And in that space, let's be honest, alts have done better than Bitcoin. I know a lot of people are going to say, well, no, they've not gone up to their all-time high and Bitcoin's blown past its all-time. I get that. I truly get that. But bar for bar, percentage for percentage, like, I'll talk about something I don't like, which is like Mudeng, for instance, right? Like Mudeng is the only coin that it does annoy me, just to see this shit hippo, right? But Mudeng in 1 week did basically a 5x, yeah, and then the next week basically did a 6x to its top. So from its bottom, Mudeng did about a 6-7x. Bitcoin has not done a 6-7x. So if you're doing this on leverage like what we're doing, you can't really complain because you got a 6-7x out of it. Like one of the coins that I've obviously love just on spot from here, MLG, has done like a 6-7x. So that's another good example. If we look at things even like PopCat, for instance. So like the famous PopCat long that I got most of our guys back into was like at the 2-1 level, and I obviously got in down here, but when you got in here at like 2-150, I think it was, you're still pretty much chilling from, all this that's going on with PopCat. And remember, like PopCat has had 1, 2, 3, 4, 5, 6, 7, 8 daily candles that are red, right? It's currently trying to pop, pun intended, back into green for the first time in a long time. So, things can move, things can happen. I think the biggest thing that I always teach people is buy red candles. Red candles are more important, but always buy them at higher time frame zones. And, the key zones that we're looking at all the time are these zones. Can it come back and back test it next week? Hell yeah, for sure. These altcoins are really, really fragile, and you've got to take note of that when you're buying them, you're not going in full force, because at the end of the day, Bitcoin is dominating. And even on the I don't want to focus on the dominance in this segment, but my point is that until Bitcoin really leads the charge, altcoins will not take over. They will not. There is a period after Bitcoin goes ballistic where altcoins basically go ballistic for the next 3 to 4 weeks. That is alt season. Like those 3, 4, 5, 6 weeks, they're alt season. If you've not lived it, you don't understand it. And that's me speaking from experience. Unless you've been through an alt season, like an actual, we've had mini leg alt seasons. Those aren't alt seasons from what I have been through, right? The alt season that I'm talking about is in 2021, and there was 2, and there were big legs, massive legs, huge legs. That's what I'm talking about when I'm talking about alt season. Okay. Now, in order for them to run Bitcoin needs to run and it needs to charge heavy and do a blow off top. Whether we get that or not, I don't know. Again, a game of probabilities. I'm still bullish, but I'm not bullish as in like taking active trades right now. I want to see how the weekly candle forms. I want to see how we open on stocks on Monday and on Tuesday. You know, a good practice that I always teach people is stay sidelined when you don't know what's going on. Don't just buy every bottom thinking, oh, this is definitely the bottom. How do you know it's the bottom? How do you know it's the bottom? Like, if you're buying, let's say here, you're getting smashed. If you're buying here, you're getting smashed. If you're buying here, you're getting smashed. If you're buying here, you're getting smashed. If you bought here, with just kept continually buying and just buying and revenge trading, you've got no system. You've got no risk management plan. And that's really important when you're actually buying or shorting as well. So like if you shorted here and you're like, yeah, it touched CS's point of control zone, I'm going to short here. Plus it matched up with what you said on this pattern that is touched the top of that trend line, that pink trend line. See here how it just follows all the way through. That's a sensible short, and it's a long-term short. And this is the thing, you want to be thinking about trading over a longer period of time rather than day in, day out. If you get into the habit of day in, day out trading, for some people it works, don't get me wrong, but you have to have the time, you have to have the effort, and you've got to be sleeping properly and have mental focus. I don't have the time to always do that. Like, I do it now and again. I like scalp trading. I like, you know, getting in and out very quickly. Yeah, it gives you a little bit of a buzz and when I've got free time, but it's also mentally draining. And that's something that a lot of people need to really fathom. Like, it really is taxing. So play the long game. Wait, see how we react. Is this a bottom or on the EMA, have we just touched the 20 EMA and are we just going to continue down as the liquidation heat map suggests, which is, you know, bloop, might come back up and then back test and then, well, we'll see what happens there. That is a possibility. Remember, everything is a possibility. And that's why my risk to reward strategy, where I buy at higher time frames, and if I get a bounce, which I normally do, and even the trades that I've got stopped out on, I put my stop loss to entry. A lot of people don't understand my strategy because you're not having the one-to-ones with me. It's why I have minimal losses. Very, very minimal losses. My account hardly ever gets damaged. And I'm not saying that in a cocky way. I'm saying that in a very humble way because even though it may appear that I'm very risk on, I'm also very risk averse. I'm very risk averse. Okay, guys, that's it from me. We will monitor, and then we will take it from there. All right, guys, I will catch you in the next one. Take care.